Welcome to the Open Door Real Estate Podcast, where we will be opening the doors to the minds of those who own, you got it, multiple doors, and all professionals in relation. Today's podcast is brought to you by Barnett Capital, working with equity partners to create wealth through multifamily real estate. Let us do the work while you enjoy the returns. Today's host is the one and only Matt Barnett. Get ready to open your mind, because we are about to do so to those who own multiple doors.
All right, welcome to another episode of the Open Door Real Estate Podcast. Today we have Mr. Darin Batchelder. Darin, thank you for taking the time out of your day to be on here.
Hey, Matt, appreciate you having me on.
For those listening or watching on whatever platform that may not know Darin, usually I try to memorize bios, but his is too long for me to do that, so I'm actually going to cheat.
Nice.
Darin's a business owner and multifamily syndicator in the Dallas-Fort Worth area, principal owner, asset manager, and lead sponsor on a 76-unit townhome community in Crowley, Texas. Darin also has minority general partnership interest and is a key principal in a 256-unit multifamily community in Dallas, Texas, as well as a key principal on a non-recourse loan on a 154-unit apartment community. And it doesn't end there. Darin is a limited partner in 14 other properties with a combined 3,944, I should have just rounded to 4,000 multifamily units, and is a personal mentoring student of Brad Sumrock's. And you have a ton of other business experience as well, which I did list it out. I'm not going to sit here and read every single thing, but I just want to touch on at least two things. I mean, you graduated with a bachelor's degree in accounting from the University of Rhode Island. And then you've been in the whole loan trading business for the past 16 years, responsible for trading in excess of $4 billion in loan sales. You've been the owner of TZK Capital since 2007, which is focused on trading high credit, quality performing real estate loan portfolios between banks to include residential, multifamily, and commercial real estate loans. When I tell you that is just like a portion of the things he has done, believe me.
That was a lot. I'm impressed that you were able to get all that out.
Again, thank you so much for being on the show. And actually, before we jump in here, I actually follow Brad on YouTube, and I heard he puts on some like really amazing events.
He does. I'm very fortunate to be part of his mentorship group, and I've learned a ton from him, his coaches. He's got a number of paid coaches, and also the network within the group has just been phenomenal to network and leverage the experience of so many other experienced syndicators.
Yeah, absolutely. And we'll dig more into that a little later here. I just want to mention, so all your properties are in Texas, right? Or that you've invested in and the ones you own?
Correct.
And what's the reason behind that, obviously, besides convenience, because you live in Texas? But
one, I think that Texas is a great market because it has significant job growth and significant population growth. So that's one reason. The other reason is I've developed relationships with a lot of syndicators in the Dallas market. So I tend to invest with people that I know, like, and trust. Mm-hmm. So those are the two main reasons.
Yeah, that's perfect. And I'm assuming you know Tupin.
I do from social media, but actually we have not met thus far. But I've heard great things about him, his company, and his partner.
Okay, I was just being nosy because when he used to live up in Michigan, we'd hang out and whatnot. So you're an LP in almost 4,000 units. How come you went more on the passive investing route rather than, obviously you're active in a few now, but majority of your portfolio is LP?
Yeah, so I started in real estate about a little over 2 years ago. Mm-hmm. And so I joined the Sumrock Group December 2017, and January 2018, I had pulled a bunch of money out of the stock market and kind of allocated it to move into multifamily. And so I started to invest passively. I had a bunch of capital. So that's one of the reasons why I invested a lot passively. Mm-hmm. I think it was also a great experience. And for those that are looking to get into the syndication world, I would highly recommend investing passively into at least one deal. Reason for that is, coming from on my first passive deal, there's a lot of emotional and mental and learning curve to, get comfortable with making that first investment. So going through that process, I learned a lot, but I was able to communicate that to other passive investors when I had my first syndication deal. So I knew exactly what people were going through.
Yeah, no, that makes complete sense. Do you plan on ever, because I'm assuming it wouldn't be TZK properties, but owning your own properties and exceeding the amount you've actually invested in?
That would be the goal, right? Yeah. So, people. It's funny because I met with a life insurance guy probably a couple months ago, and he was like, "Hey, Darin, man, well, let's work backwards. When do you want to retire? And let's work backwards." And I'm like, with this syndication business, I really don't want to retire.
Mm-hmm.
My goal is just to continue to do larger and larger deals and attract more and more capital. The thing that I love about this business versus my loan trading business, all the profit comes to me and my family. But the syndication side is a business where, hey, when we're successful, we help grow the wealth for all the limited partners in the deal also. So that gets me excited that it's not just about increasing my bank account, but it's also helping other people grow their wealth. So that's exciting to me. And frankly, nobody had approached me in the 48 years prior to invest in these private syndication deals. So I want to get the word out, let more people know that they can get involved. And it doesn't have to be where they allocate all of their funds to it, but it should be an alternative to people that do want to get into the real estate world, but don't have the time or the expertise to actually do it themselves.
Yeah, absolutely. And I feel like I'm kind of jumping all over here with these questions, but I don't want to say it's an advantage, but do you feel there's an advantage? I'm going to say it anyways, to you having your bachelor's in accounting and being able to invest in real estate? Because I feel like, syndicators are going to underwrite the deals. Do you ever find yourself looking at the numbers and kind of not trying to critique them on it, but finding yourself digging into the numbers a little more than you should be?
Yeah, I think that, well, I would answer that in a few different ways. I think that I've met a lot of very experienced, very successful syndicators that have started in a lot of different areas, in their career. There's lawyers, there's attorneys, there's doctors, there's real estate investors. So for me, yeah, having the accounting experience and having the loan trading experience and knowing the multifamily asset class, all of that was a huge advantage to me, to delving into this asset class on a real estate side and understanding the numbers behind it and the terminology behind it as well. Having said that, I think the key component to being successful is, one, making the decision that you're going to do it, and then having the persistence to doing it. I don't think that a qualification is you have to come from a CPA background, or you have to come from a background where you already understand the multifamily asset class. Yes, that was an advantage for me, but you can do it without having that experience, but you have to be the type of guy or girl that is determined and persistent to get it done.
Yeah, absolutely. And would you say, what does your portfolio mainly consist of, like Class A, Class B?
BC.
Yeah, BC. So I'm just going to assume most of them are value add.
Correct.
Yeah.
Correct.
Okay. I'll just me being nosy.
Yep. No, BC, 1960s to 1980s construction. What we go after is stabilized properties, which we would define as 90% or greater occupancy, but has some kind of value component. And that value component could be, the exterior needs, to be redone to improve the property, or it could be the exterior had been done, but the interiors haven't been done. And it's improving the property in some way, shape, or form so that you can increase the value, increase the rents, and these properties are cash flowing properties. So if you could increase the cash flow, then the valuation goes up hand in hand.
Yeah, no, absolutely. And obviously I'm up in Michigan, so I don't know too much about Texas, let alone the Dallas-Fort Worth area. But when I did a little bit of market research in there, just from what I found, it was about 5 months ago or so, there was a ton of new construction.
There is. There's been a ton of new construction, multifamily, and that's been probably the last 2 years. There's been a lot of talk about that because Dallas is one of the biggest markets in the country for new construction multifamily. So a lot of people had questioned, well, in a downturn, how is that going to impact performance? And with being part of this network, we would debate this and discuss this all the time, and the consensus had been that all the new construction was a product, so geared more towards the white collar worker, making 80, 90, 100,000 plus, and the world that we live in, the BC, is more workforce housing, people making between 30 and 65,000 a year. So they're not building any more of that product. So although Dallas has had a lot of new construction, it's all been geared towards that A product, the higher income. So
yeah, no, that makes sense. And I was just going to ask, and you already answered that question for me, is how do you think it would affect any of your properties by chance? But clearly it's not going to, which is
well,
obviously.
I think any downturn will impact all properties.
Of course.
The thought process though is that people will, a few things, potentially could happen. One is that people in the A properties want to save some money. So they start to flow down to maybe the bottom tier of the A's, start to flow down to the B properties, and same with the people that are renting in B properties. The lower tier may want to save money and flow down to the C properties. In addition to that, if it's a national downturn in the economy, my viewpoint is that people will gravitate towards where there's jobs and where there's opportunity. And so you may find, even in a downturn, Texas may find still an increase in population. So people move out of more expensive areas like the coastal markets like California and New York, and gravitate towards Texas for jobs and a lower cost of living. And with that brings new people, new competition for apartments. In addition, in a downturn, people could have trouble paying their mortgage and either sell or have to foreclose on, and those become new renters as well.
Yeah.
So time will tell to see what actually happens, but that's kind of some of the thought process behind being in that BC multifamily space.
Yeah, no, that makes complete sense. I remember when I first got into like the multifamily, because I've been in residential for a few years, and I had someone tell me, I'm like, what happens when the market drops? Like, everyone loses their homes. What happens with apartments? And the exact same thing. He was like, not that I wish upon anyone getting foreclosed on their home, but it does happen. And guess where they have to go and rent for the next 5 years? I'm like, well, that's a good point. So in the beginning, you mentioned Brad Sumrock and your networking group, and you had mentioned the networking group a few more times. How is leveraging like that group? I don't know. I personally don't know anything about it. For those listening or watching, explain that to us in full.
Sure. So, when I decided to get into real estate a couple of years ago, I decided I did not want to do single family fix and flips. I wanted to do larger scale multifamily. And so I wanted to find a way to do that. So I went searching out for a way to do that. And I'm a believer of, finding people that have done what you want to do and then, try to mimic what they did. So I found this group through a meetup group. I met some folks that were part of the group and spent some time with them. And they shared with me how they didn't know the multifamily asset class. They joined this group. they helped them along the way, kind of step by step. And so, I was like, if they can do it, I can do it, right? So I
Right.
joined the group, and the first thing I did was reach out to a bunch of syndicators that were in the group and set up some meetings at Starbucks, and one, pick their brain in terms of, hey, what has the group done for you? And then secondly, try to navigate on, okay, well, how does a new guy become successful? And a couple things came out of that. One was, one after the other was like, change my life, change my life, change my life. And they were very open about, hey, my net worth was here and now it's, 5 to 10 times that. Secondly, I asked each of them, hey, I totally get why I would want to partner with you. You have all the experience, you've got the relationships, you know how to run the deal, you know how to get the financing. But why would you ever want to partner with a new guy like me? And each of them answered it the same way, which was really unique. Was that they said, "Find me the deal," and which I was surprised at, because all these people had already been successful. They already had one deal, three deals behind their, under them, and so I was kind of curious. And, well, you're already doing deals. Why would you say, "Bring me the deal"? Well, they're looking at larger deals, right? So they're looking at, and they don't have the bandwidth to underwrite every deal that comes to market. So from their viewpoint, they're like, hey, if you find a deal and you do all the work associated with it, but you need an experienced partner to bring you credibility and to give you the experience with the financing company and with the brokers. And, I'm happy to do that. And so that's the strategy that I took, was that I was going to go out, focus on getting a deal. And then right before putting in the letter of intent, I would go to get a partner. And that's how I was successful on my first transaction.
Yeah, that's amazing. And it's weird how coming together, and you mentioned it from the start too. If you're going to do something, then you got to bring others up with you to get to that next level. It couldn't be a better business model to do just that.
Absolutely. Absolutely. And so this group, for me, I knew the multifamily asset class, and for some people that, they may not know the multifamily asset class that well. So there's an education component associated with it. But for me, the value was really in the network of people. So, we have meetings like once a month or once every other month where people fly in from all over the country, and, it's an all-day event, and I'm able to just meet people that have already done it, so I could pick their brains, and then also meet passive investors that are looking to not be a syndicator, but look to invest in deals. So it provided me a network to build those relationships.
Yeah. And I'm sure you've heard this, but I've always said your network equals your net worth. Obviously not literally, but the more people you know, you can increase your net worth.
Absolutely. And, my partner that I brought on this deal, his name is Raj Gupta out of Chicago. I never would have met him if I was not part of this group, right? Wow. He lives in Chicago. I live in the Dallas area. But we had met, a number of times during the year, and we got along well, and he had substantial real estate experience. And so, it was a good fit for both of us.
Yeah. So let's dig in a little deeper now, though. Let's talk about, obviously we build the relationships, we find the deals, we enjoy getting them under contract, raising the money, and closing the deal. But it seems like a lot of conversations end there. Let's talk about some challenges either you or your partners or somebody know or anything have had after closing.
Okay, I'll talk about a few. One was, since I didn't come from the fix and flip world, and I'm more of a numbers guy. I started out as a CPA. I was in sales. I'm a business guy. I'm not I don't come from a decorator background or rehab background or construction background. So for me, the rehab component of it was a learning process. And so being the lead syndicator, we had, raised money to purchase the property, but also raised money to do the rehab on the property. And for this property, we were going to paint the entire property and replace all the perimeter fencing and really kind of spruce up the curb appeal, as well as do the interior units. Well, the interior units was pretty easy. I met with the property management company and we discussed a few things and we just rolled with that. And it was kind of a consistent theme as each unit, somebody moved out, we would upgrade the interior. The exterior, however, was a different animal. It was, for me, I was looking at it not just for a one transaction, but for, I looked to continue to build additional properties in the Dallas-Fort Worth area. And I wanted to develop a relationship with a rehab company. So the strategy typically on a value add multifamily deal is have your complete strategy in place. And when you close the deal, immediately start on the exterior. Okay, so that it brings a different tenant profile. The curb appeal is enhanced, and it brings a different tenant profile that's willing to pay a higher price for rent. I purposely delayed that process because I wanted to build my own relationships with rehab companies. So I brought multiple rehab companies out to the property, walked the property, had them provide bids, and that took time away from actually starting. Then once I decided who I wanted to work with, then it was a matter of picking the paint colors.
Yeah.
And I'm not a design guy, so it was, all right, let's, you come up with some ideas, present them to me. They would do that, and then I would say, I don't like it. Let's try again. And that process kept getting delayed. So we, now I've learned, and I probably would do that faster, but that was a learning process. I wouldn't change it. I'm glad I did it that way, but next property, I hope to implement the exterior rehab quicker.
Yeah, you're like, I know how to do this now. I'm a designer.
Right. Well, it's really meeting the right people, and so I had probably one, and I went down that path paint wise a few times, and then I brought a different designer on, and then a different designer and then different designer, and now I know who I would work with next time.
Yeah.
So it's really the team that you build and the confidence that you get in your team members.
Yeah, absolutely. And obviously I asked this question way in the beginning when we first started talking about obviously growing the units you own versus you invest in to a larger scale, what you do invest in, what's your plan moving forward from here? I mean, you've accomplished so many things. What more can you do? And you're like, I'm just getting started.
Well, yeah. So people told me, the other syndicators were like, hey, Darin, once you get a deal, your second deal is so much easier. And, the brokers are going to start bringing you off market deals and da, 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 da. So that was true. Brokers started bringing me off market deals, and I started underwriting those deals. And I quickly found that there's a lot of off market deals that are just a complete waste of your time. They're, the prices that they're asking for are completely unrealistic, and it's kind of a fishing exercise. The seller may not really want to sell. He just wants to kind of know where the market is and what he can get. The broker may know that the valuation that the seller wants is completely unrealistic, but they're trying to spend time with you to develop a relationship.
Yeah. So
there's, you could get sucked into this time waster. So that's one thing. Secondly, the Dallas-Fort Worth area has been extremely, extremely competitive. So, we closed December 2018 on that 76 unit. The first quarter I took off to just manage the deal, and then, but second quarter of 2019, I started looking at deals again. And in the last year, I've been runner-up on 3 deals. And so there's just a lot of capital that's out there looking at multifamily deals. and there's a lot of quality buying groups. So, in Dallas, you would see 15 offers, maybe 5 or 6 would go into best and final, and you'd have 3 that end up really close together in terms of all the terms and pricing. And so then it comes down to the broker and the seller, deciding, okay, of those 3, who do we want to go with? And so, my goal is to continue to go bigger. So I, did a 76 unit deal. I'd like to do a 100+ unit deal, and 150, and then 200, and then, just keep growing it. And then that should get me to the next 5 years or so. And then, if I get bored with multifamily, then there's just so many other asset classes in real estate. I mean, could move into retail's not really strong right now.
Storage maybe
based on COVID, but there's storage, and there's a lot of different opportunities that to just continue to grow that learning curve, and it depends on how much capital I can attract to doing these deals. I really believe there's tremendous opportunities and tremendous wealth that could be attributed to real estate investments. And so my goal is to attract more and more capital away from the stock market and into real estate. And if I can continue to grow that capital base, I'll just keep going bigger.
And I don't know how deep I can go into this question, but just from experience, the real estate returns have probably been a little higher than the stock market returns.
I would say yes, but it's still too early to tell for me. So of all the deals, I'm in 9 different deals, including mine, and none of those deals have gone full cycle yet. Gotcha. So they're all in various stages of their business plan. But what I can tell you is a couple of things. One, we're taping this right now in the middle of this COVID crisis, and a lot of people have had their stock, market portfolio drop by 25 to 35%. And that's one of the nice things that I've felt ever since I've shifted a bunch of capital over to the multifamily world. There's no ticker symbol. So, when the stock market goes down, I don't feel it with my multifamily investments. Now, my main concern is with each of the syndicators, just don't lose the property. Yeah. So as long as the cash flow, I'm okay with, hey, you're going to cut my distributions for a time period, during a rocky time, but just don't lose the property. Keep making your mortgage payment and keep the property, because I am confident that over time, just inflation in itself is going to bring rents up and valuations up over time. I don't know if that's a year, 3 years, 5 years, 10 years. I can't say that for the stock market. I've invested in the stock market for years and years and years, and whenever there's a downturn, there's a few stocks in my portfolio that may not come back, or may take 5 or 10 years to come back, where others may come back quickly. With real estate, you just don't want to sell in a terrible time. If you can ride out that wave and you have the cash flow and the capital to do so, then you'll come out the other side. That's my viewpoint, at least. Yeah, no, and that's absolutely perfect. When we, not to say filter out our investors, but when investors reach out to us, we have that exact conversation saying, hey, if something in the market would have happened just with you now, for example, COVID, we would not distribute for 2, worst case, 3, 4 months, whatever it may be. But to get them to understand that, that's actually saving the deal in the long run. Right. And we just try to have that conversation, and that makes complete sense. So this part of the podcast it's just 3 questions completely out of the blue. It's not made to stump you. I have done that in the past. It's not the purpose, but it is to get maybe more of a personal answer out of you, but they're not personal questions. So Go for it.
The first one is, I actually wrote this one down earlier because I had seen it and thought it was amazing. What is your key professional strengths that you personally think yours are?
I think I'd say building relationships. I mean, in my loan trading business, they're very, very large transactions typically, and
Mm-hmm.
both sides of the transaction have to trust, maybe in the middle. And then in the syndication business, people take a lot, it takes a lot to save their money and then trust somebody to manage that for them and put that into a deal that they trust. And one of the things that since we've closed over the last year or so, the positive feedback that I've gotten from a lot of the investors is that they like the transparency in the monthly communications that I
Mm-hmm.
provide back to investors. It's not always a straight line. There's good and bad things that happen, and they like that I'm not always just telling them the good. That I'll tell them, some of the challenges that we're going through too. So that's I guess a long-winded answer to your first question.
No, that's perfect. And then this second one, I meant to change them up after each podcast, but I've used the same question every single one because I've loved the answers we've been getting back. What 3 people, dead or alive, would you like to have dinner with, and why?
I've heard that one over, and and maybe not 3. I've heard like who's the one person you would want to have dinner with,
Mm-hmm.
and I'm sorry to say, I rack my brain and I just don't have like the one or 2 or 3 people that I'm not really. I don't go crazy over like famous people.
Mm-hmm.
Now, I love to learn, and there's a ton of people I would like to learn from, and I love reading. I'd love to to meet up with a bunch of people that I've read their books on or I admire, but I just can't come up with 1 or 2 or 3 people.
Yeah, you're not the first person to answer it that way, so it's completely
Okay.
fine. Since I'm going to bring this one up, since you have all the books behind you, it doesn't have to be from a book. It could be from a person, mentor, whoever. What's the best piece of advice you've ever received?
Best piece of advice. There's a ton of great advice, but I would say between reading and my own experience is that, find something that you're passionate about. That life, there's too many people that spend their hours working for a job just to make money so they can buy stuff,
Mm-hmm.
and I think that is a trap that a lot of people get caught up in. And when they get a raise, they get the nicer car or the nicer house, and then they can't move to what they really want to do. Now, somebody else that has a lot of wisdom said, hey, go after something that you make a lot of money, and then you could go and do your hobbies with that money. But, I just think that spending all of your time doing something that you're miserable at, that you don't enjoy at all,
Mm-hmm.
is a poor way to live your life.
Yeah, no, I couldn't agree more. And actually, have you ever read Outwitting the Devil?
No, yes, by
Pretty sure it's Napoleon Hill.
Napoleon Hill. Yes,
Yeah, that's exactly.
I read that last year, and that was a great book.
Yeah.
Book.
I mean, that's basically what the book talks about. Is the devil isn't it like you go to hell? The devil is you're going blindly through life. I don't want to say like brainlessly, but if you're not awake in life and you're just kind of moving forward with no purpose, that's the true devil.
Yes.
Right? So
you're absolutely right.
I had here, on the guest sheet, at the time you didn't have a book of recommendation, but I'm sorry, I'm going to call you out on a book of recommendation because you posted a book. It's not real estate or multifamily or anything related on Instagram today called Open.
Yes.
Can you explain why that was such an amazing book?
I like that book because, I read a lot of business books, and I saw this recommendation from somewhere, I don't remember where, and I grew up playing tennis, and I watched Andre Agassi. He's the Open is the autobiography of Andre Agassi, and I grew up watching him play, and I admired him. But I also had I guess based on the media that portrayed him, I had a viewpoint of him as being a rebel, somebody that defied authority, just wanted to do his own thing, and selfish, and he was always unique, but he was a great player to watch. Okay. So when I heard about the book, I didn't know what to expect, but I read it, I walked away with a completely different attitude. I do think that it took him a while to really understand his self-identity. But he's extremely loyal to the people that in his inner circle. And he really cares about others. And when he really started to, he hated tennis, which was crazy to me when I read that. How can you be number one in the world and hate tennis? But he grew up with a dad that just was very demanding and forced it on him. And it wasn't until later in life when he really searched within himself, like, why am I doing this? Why am I working so hard? And he came up with, for him, his why was he wanted to raise money to build a school. And so he created a foundation, and that's when things really changed in his mindset. That he wasn't playing for himself anymore. He wasn't playing because his dad told him to. He was playing because he wanted to raise money so he could build this school for underprivileged kids. And now he's up to this date, he's raised over $118 million.
Wow.
And has built 17 charter schools. And so that is an amazing accomplishment. And, it's a driving force and a fantastic why. And the book taught me that it's, he's not selfish. Like he just couldn't figure it out for a while. And then, and I don't blame him. So, it was a good book.
Yeah. It sounds like an amazing book. And I don't know how to even ask this question or bring it up, since obviously the book mentioned it. And I know at some point, I don't plan on keeping all my profits or anything like that 100% for myself. I want to put it toward charities and help do things like build schools in other countries or get the vets in our own country off the street, stuff like that. Do you plan on doing anything like that as well?
Very good question. And it would sound good if I said yes. But I don't really have I'm a Christian. I tithe to the church, and that's something that's important to me. But I don't have like this huge urge towards some other charity in addition to giving back to the church. But what is a driving force for me is this notion that, with my other business, all the profit goes to me and my family. With syndication business, I look forward to helping grow the wealth of a lot of other people. And if I could help them grow their wealth, if they have the passion, to give back to different charities, then I've helped make that happen. So that's kind of where my heart is I want to help other people grow their wealth.
Yeah, that's actually a really amazing perspective. Shameless plug. Where can people find you? You're always posting on Instagram. You're busy on Instagram. People can find you there. But let's say your next deal, where can people go to invest with you, learn more about you?
Yeah, I'd say if you are on Instagram, that's probably the best place to reach me. I'm at Batchelder Darin. And feel free to direct message me on Instagram. And if you're not on Instagram and you want to reach out to me, you can reach out via email. And my email address is dbatchelder@tzkproperties.com. So that's probably the other way. I'm also on LinkedIn and Facebook. I absolutely love not only talking to people that want to invest passively into deals, but I also love talking to people that just want to get into the space and want to learn. And I've had a ton of people help me, and I want to give back and help others. And one thing that's very unique to real estate, I'm sure that you've seen this also, is real estate is a very collaborative industry. And I can't, it's so different than a lot of the other industries I've been a part of, that people really truly want to help each other. And sometimes it's because they're involved and, you partner and you both, have a financial gain. But other times it's just, hey, I want to help the next guy. And you just don't know what's going to come down the road, so you may not partner up with them today, but 5 years from now you may. Yeah. And so I love the fact that so many people have helped me, and I want to help others. Yeah,
I love that. I always say I want to be able to provide value to someone, but it could be right this second or 5 years from now. Either way, the multifamily is going to make that possible, because I know at some point you end up working with someone, and it could be you could have 5,000 units and be like this, like professional per se, and then someone could be Googling what is real estate and message you, and it could be the dumbest question, which there is no such thing, but you never know. 2 years from now, they could also be at 5,000 units, and you guys end up doing a big deal together, and you never know. It's crazy, but just simply responding and helping these people goes a long ways.
Absolutely, and part of it is learning about the process and how do I get involved and stuff. And part of it is mindset. I've been on, people have reached out to me on Instagram before, where I've had conversations, and they feel like they have to start with a duplex or a fourplex or an eightplex. And I'm not saying that there's anything wrong with that. I actually bought a new construction duplex first. And that was, I don't think it's going to be the best investment ever. I'll make money on it, but it got me in the game, so but I went from duplex to 76 units, and now I want to go higher. But, I tell these people, like, why do you believe that? And they just feel like they're not worthy. Yeah. And why would somebody want to partner with them? And so sometimes the conversation shifts towards, mindset. You have to believe that you have value to bring. And once they understand that, they may make the same decision, right? But at least now they have a choice and they can understand. Some people can't see the value in being a new person in the real estate world. Just like when I interviewed a bunch of those syndicators, I didn't know what their answer was going to be, but they were like, go find me the deal. And I was surprised, like, why would they want me to do that but then I understood, so anyway, there you have it.
Yeah. Self-worth, basically what it comes down to. There's a difference between coming into it cocky and thinking you know everything versus believing in yourself and just sometimes honestly just shutting up and listening to the people around you and actually absorbing that information and then going and implementing it.
Absolutely. I mean, that's why I'm a proponent of find people that have done what you want to do, right? They've figured out how to do it. And so they can hopefully give you some wisdom on how you can avoid mistakes and become successful.
Yeah. And actually that's weird timing. I'm reading the book 3 Feet from Gold right now, like with the whole team. We have like a team book we're reading. Again, it's a mindset thing. We're all in the same mindset, but it mentioned, don't look at everyone else at your level. Instantly capture the market leaders and go straight to them and work with them. And then everything else underneath will just fill in. Like it's crazy.
It's funny, you mentioned 2 books, the Napoleon Hill one, and then 3 Feet from Gold. So I went to a conference in California called Secret Doc. Greg Reed. Greg Reed is one of the authors of 3 Feet from Gold. Yeah. And so phenomenal conference. It's not a real estate conference. It's more of they bring people from like all different industries. But they bring in fantastic speakers, and he has that viewpoint of, always going and thinking, much higher, much bigger thoughts much bigger goals, and leveraging the experience of others. And when I went to, you mentioned Instagram. When I went to the Secret Knock conference last year, it was March of 2019. I told my wife, one of my goals is to meet somebody. I know nothing about Instagram, but I keep hearing that you need to be on Instagram. I always thought it was a tool for my kids, just to look at pictures. And I told my wife, I'm going to go there. I'm going to find somebody that knows Instagram. And I did. And so then I hired that person to teach me.
Nice.
And now I spend more time on Instagram than I do on Facebook or LinkedIn or any place else. And I've met some fantastic people through that social media network. People from Vegas and Chicago, and an individual in Spain, and just it's just a way of forming relationships that you couldn't have done otherwise unless you met them at a physical conference.
Mm-hmm. Yeah. Isn't it funny how instead of using social media and utilizing social media, there's a big difference?
Yeah. Oh, yeah. Absolutely. Absolutely. And I get off some calls and I tell my wife, hey, that person is very interested in, becoming an investor in the next deal. And then the next person is like what we were talking about before. I'm like, you know what? I spent an hour with that person and I guarantee you he will not invest in any deal. But I believe he's a fighter. He's going to kick and scratch, and he's going to be successful in this space.
Mm-hmm.
And I'm like, just come back to me and let me know that this conversation helped in some way, shape, or form.
Right. Yeah, absolutely. Thanks for being on the show. Is there anything else you'd want to say or close out on?
No, I mean, I just, I would encourage, any of your listeners that, really think about what you want to accomplish and what goals you want to achieve. And if they're real estate related, then reach out to people that have done it in the real estate world. But if it's not real estate really related, don't let fear stop you. There's too many people that are stuck in a job, in a career that they're unhappy with, and they're just afraid to make a change.
Yeah, no, absolutely. That's well said. And actually, I'm going to jump back for just 1 second because it came up in my head.
Okay.
For those listening and watching, we have never met. I messaged you on Instagram, and it was simple as that.
Absolutely.
And just to prove a point of how well social media works, this is that point.
And if you're ever in the Dallas area, look me up, man. We'll get together for a beer.
Boom. There you go. All right, Darin, I appreciate you being on the show and taking the time out of your day to do so.
Thanks, Matt. Had a good time.
Awesome.
Thank you for listening to today's episode of the Open Door Real Estate Podcast, brought to you by Barnett Capital, where every Monday we will be opening the doors to the minds of those who own multiple doors. You can find all past and future podcasts at BarnettCapitalCo.com/podcast or Facebook.com/BarnettCapitalCo. Thanks for listening.